Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb, and today I am absolutely delighted to welcome back the trilogy, Duncan Trenholme. How are you doing?
Great to be back.
Lovely to have you back. This is our annual thing now, isn't it? It's what we do every year. We look at the various different cycles. As I was saying before, I think the first time you came on the show, we were talking about the era of convergence. I guess the coming together of traditional and decentralized marketplaces. A year later, everything had changed in the marketplace, and we talked about restoring trust in digital assets. Today we're going to find out where we are a year on again in the ever-changing world that is digital assets. So I know that most people have watched our conversations now in the world, but for those who haven't, let's start with just a little bit of a recap. Duncan, tell us a little bit about yourself and what you do.
Thank you, nice to be back. So I am the Managing Director and Global Co-Head of Digital Assets at TP ICAP. So TP ICAP is the world's largest interdealer broker. We're a venue operator. We run traditional financial, energy and commodities markets, primarily over the counter, so off exchange products. So we're the middle meeting point of markets.
Yeah.
We've had a crypto and digital asset business for 4.5 years now, live in the market.
I love the fact that that was the brainchild that you sort of brought to the table as well. And when we said it before about the markets you've been in, I've always been impressed that it's something that TP ICAP got behind and sponsored you to sort of help, build out. Yeah,
well, myself and my co-head Simon Forster, but yes, we had supportive management who took a bet and a risk on crypto in one of the bear markets. And building in bear markets
is everything,
is
right?
usually a good thing. So yeah, we have 2 live products in the market. We operate a derivatives matching venue for crypto options and futures. That's run by a team of voice brokers, so high touch interaction with clients, working prices. And then we operate a spot exchange that's electronic, allows our customer base to access the physical crypto. So right now we're doing Bitcoin and Ether spot trades, and we do that in partnership with the US firm Fidelity Digital Assets.
Yeah, and how's that been going? So it's been exciting sort of stuff that you've been talking about. I know it's sort of as with all of these sort of things, a journey. It's a startup within an established business at the same sort of stage in a marketplace that has had volatility, for want of a better word, all the way through it. And volatility is a good thing in markets. It doesn't feel like it every single stage of the process. But you've been through a hell of a journey over those sort of 3 years with the business. Tell us what's happening now, what you're excited about, what's happening with the business.
Well, I think the operative word is journey.
Yeah.
It does feel like a journey. If I was going to classify it in one word, I'd say we're in the scaling phase.
Yeah.
And of course, our 2 products are slightly sequenced. We got one in the market about 3 years before the next. But you are trying to marry your capabilities internally from a technology perspective, a approvals perspective, a risk perspective, with the demand we see from clients, and that has not been linear. That changes during periods of volatility and peaks and troughs of the market, with your resource of your team. We've always taken, and I think last time we talked about not building too quickly in terms of expanding too quickly. Yeah. We've always taken a slow and steady approach, and I think that's been vindicated. But right now we're starting to see customer demand grow. We are seeing more professional and sophisticated firms come to the market and want to trade crypto. And we are also learning as an organization, as more volume starts to go through these platforms, how we scale the infrastructure internally. And of course, that usually means you have problems, and then you try and address them, because it's impossible to anticipate all of the problems. But yeah, I mean, on a personal level, you feel like you're at the, almost at the start now, where we have 2 products live, still a very small percentage of our global customer base in crypto. So you almost feel like you're at day one of, okay, now we're live, now we have these products, we've found a product market fit with a small section of our client base, and now we have to take this from a small business into the large business that we think it will be in the future. That's sometimes quite challenging when you've had 5 years of build out beforehand. Mobilizing the partnerships, the exchange, the tech build out internally, setting the scene internally that we're now in crypto, that we're looking at tokenization, that this is a product that the organization is involved in. So you've done all that, and then you feel like you're at the start line. Yeah,
but that's a really important thing to add, though, isn't it? Because I think there is a very privileged position you've been in as a business, and actually a very wise position to have been in. Say, look, we've had enormous undulation in the space and a lot of learning for everyone over the last 2-3 years, and the ability for you to not have to say, right, we're all in on this, and to race after something and make mistakes on a cataclysmic scale. That's been a real privilege to not be able to do that, to be really pensive and thoughtful, and that's something I always get from you when you talk about this sort of thing. It's a very designed play to build something scalable and long term. And I think what this market has been absolutely right with, the digital asset space has been absolutely right with over the last few years, is a lot of people who are trying to and cataclysmically at various stages, get rich quick schemes and jump onto bandwagons and go in with massive funding, massive investment, and say, right, this is what we're in, all our chips are on this particular play. What I love about what you've always done with this is say, look, this is a long-term play in an institutional environment to build something up there which we're going to learn about and go to. And now I think the exciting time for you guys is we've got something which has got relatively strong proof of concept, and the scalability of it, as you talked about, with working with such a small fragment of the largest business of its kind in the world, to be able to take that on and move that further forward has got enormous scalability for it.
Yeah, I think there's some interesting...
Not too low pressure, I think.
Interesting concepts in what you just said. I think there should be a healthy friction between the business and senior management around, you want your business to be asking to do more, have more funding, go faster, build quicker. Yeah. And it's healthy to have management and decision makers with hands over the purse strings. Yeah. And I think one thing that's helpful is being in a broader business where you've got competing priorities across our traditional asset classes like FX and credit, and then management are having to make a prioritization decision across that. That friction that exists means that only the best ideas, only things that you can really stand behind do get approved and get budget. So some of that comes from, I think, the structure of doing this startup within a big organisation. That's definitely been helpful to us. But we also know that and I think it's important to build alongside your customer base, and if your customer base aren't in the market, then you're going to have trouble monetizing and making your offering commercial. And we weren't sure at the start how long it would take traditional financial firms and conservative financial firms to get comfortable in crypto. And I think that there's a balance between moving quickly and having more resource and adding cost to what you're trying to do. That puts more pressure on the business, because the bigger your burn rate, the more focus there is on your business to become profitable, and often shorter the time scale that you have and the string you have to play with. Keeping things lean, doing things slowly, and not overburdening your business with resource, and is good if you aren't sure on your time horizon. So.
And I think you touched on it there. The sort of conservative element of the industry is a really important part of it. And when I talked earlier on generically about the space, there's a lot, as I say, get rich quick sort of schemes. This to me has never been about that in the institutional space. It's been about how can we utilise this to find a new asset class that can really move things further forward and use, in my mind, the best technology that's out there to be able to do that. And I think when you put those two things together, it will be a more conservative play than perhaps it would seem on the tin. And doing that correctly, going back to our conversation last time about restoring faith in digital assets, that has to be about correct plays and decision making, because I would imagine it would be very easy for you to lose the faith and the investment and the thought process and the backing you've had in the business by cutting corners and just saying, right, we've got to get this done.
Yeah, there's a phrase in the industry which I'm going to paraphrase, but it's along the lines of it takes years to build trust with relationships with clients, but you can lose those in an instant, right?
Yeah.
So we have known from the start that being a big financial services firm that's heavily regulated, operating in major financial jurisdictions, our room for error is very limited, and therefore that is why we've taken very conservative steps into the asset class.
Yeah.
So we're now at a point where I think we're at a very interesting point in the asset class's evolution, where the two of the big milestones this year were the Bitcoin spot ETF in the US and the Ether spot ETF in the US, and I think they were really important from a signalling perspective.
Yeah.
The ETF itself is useful for a set of investors that have a real preference for this is how we invest in financial markets. I think the bigger thing was it is a signal to senior management at most large organisations that if this is something the SEC are comfortable with, then this is something that it almost makes the market a stamp here saying we're here, Bitcoin's here, Ether's here. Not an approval, but in effect an approval of these two assets are now something that traditional finance is involved in. And I do think when I speak to clients that there is an understanding now that Bitcoin has a place in the investment portfolio, largely around digital gold as a narrative. I think that Ether clients are getting to some form of programmable money, world computer type understanding of what it is. But I think once you get past those two, there's less understanding of what the other crypto assets are.
Yeah.
And I think that's a challenge for the crypto industry at the moment, is how do you explain in one phrase what these other layer ones, these layer twos, what they do and what their place is and what the place is from an investment perspective.
I think it's really interesting because coming back to those conversations we had about restoring faith in the space, a lot of it was about communication, and this being still a relatively new asset class, there's still a lot of education and communication that needs to go on around it. And as you say, look, it's very easy to get sunk in the narrative and get lost in the narrative and then move away from it because of that. And I think the more robust that sort of conversation can be and the more robust the narrative can be around it, the more that trust builds and to where we are at the moment, which is I think it's a really interesting space or place in this digital assets journey, because on the surface of it there's outstanding news that comes out of the sector, probably better than it's been for the best part of three years. But it's almost like the noise has been doused a little bit with other technology that's come out and become the emperor's new clothes, right? Of course, AI.
Yeah.
Tell me a little bit about your thoughts around that and where we are at the moment and what that means in general, because I think it's almost been quite helpful to the sector to have that sort of relatively, hiding in plain sight aspect to what we're talking about.
Yeah, in terms of the hype cycle of crypto, we are out of focus largely, although I think Donald Trump is doing his best to bring it back in focus. Yeah. I think, Bitcoin has been towards its highs, and yet we still don't have that hysteria around the asset class. That's a good thing. I think.
Why do you think that is? Just because of the magicians look over here, misdirection, etc. of AI, or do you think?
No, I think it is fair to say that the eyes on new sort of technology breakthroughs are focused on AI, and that's consuming a lot of bandwidth within organizations in general, and everyone's trying to figure out how they have an AI strategy. I think it's also a feature of, over time, people just become more accustomed to Bitcoin, to Ether, to digital assets in general. They've existed long enough now that it doesn't feel new. And yes, Bitcoin and Ether's price is volatile, and it still changes quite drastically. But I don't think there's the same question or existential question about, are these things going to be here in 5 or 10 years? It's more what is their current price, and why is it that it's undervalued or overvalued currently? So
I think everyone's very much of the opinion that this is here now to stay, and will get more and more mainstream as it goes on. Yeah,
I still don't feel like I have good answers to what, where are we seeing these things being used at scale in the world? Outside of.
And by these things, you're talking digital assets.
Yeah, digital assets, crypto in general. And what I mean is, if you are worried about inflation, you can hold Bitcoin, and you can think about it something like digital gold. It's a option for you in terms of what you want to hold your wealth in. And I think people have seen the amount that stable coins are utilized and transferred cross-border, and see that there's a use for settling on the Ethereum blockchain, settling value of some form on the Ethereum blockchain. But for these technologies to reach their potential, then we really need to see businesses starting to implement some of their services on them. We just need greater adoption across wider industries, like not just within tech, but across the health or media, and I guess not just within finance.
What do you think makes that happen?
Well, I don't have a good answer to that. I think.
Do you think? I'll phrase it a different way. What makes it happen? How does it get to that sort of phase?
So I think that, looking back on the last 5 years, I don't think the technology was ready to be used at scale. Whether it's the throughput that you can put through it, the user friendliness in terms of developing on top of it, the user interfaces, making it really easy for people to engage and utilize it as a service. I think it's way better now, and I think we're probably getting to the point now where it's easy to use and easy to build on top of. I think one thing that is going to change it, and I do see now, is a lot of the different blockchains foundations have big war chests of money or value in some form, which has often come from their own token, and they are spending that in advertising and sales and marketing. And the truth is, it's going to come down to the success of those teams. Let's say the Solana Foundation, the Polkadot Foundation, the Avalanche Foundation, and their sales teams of, we have this technology, it can process X number of transactions per second, decentralization has these benefits, this whole ecosystem of different applications have been built on top of it. If you're a gaming company, if you're a health tech company, if you work in the media industry, this is how you can use our blockchain, and this is why it is better than insert, cloud technology or something else. And just hard yards of finding use cases of actually we can solve this problem for you, and that is how you get more adoption. That is how, you know, like insert for discussion purposes, Solana's ecosystem is utilized for a variety of different transactions.
Yeah, there is another way, of course, just saying it's got stuff to do with AI as well. Then get everyone building into the back of that too.
Ask AI, how does blockchain become?
yeah, exactly. There's a thing by calling it an AI tool. Let's come back to where we're at. So you mentioned the US there. You mentioned Donald Trump, and we know there's going to be some fairly significant changes happening, whichever way that things go towards the end of the year. Both of those look to see a significant swing in favour of the sector from where we were sat last time out, where where we sat down a year ago, and it was almost being frozen out of the US, and there were some fairly significant headlines around it there. What does that mean? What does that mean for the sector? What does it mean for companies within the sector? What does it mean for the US? What does it mean for you guys?
It's amazing to think how different it was when we were talking last year.
But and how different it was from the year before that as well.
What does it mean? It means that we expect in more investors to allocate to the crypto market. If you are a business involved in crypto in some way, it will be presumably easier for you to get new things done. And in general, I think what we see globally is a mentality shift of we do not want to operate in the US, we do not want to service clients in the US, we may want to move our operations overseas to we expect the US to be a place that we can do business in crypto in 2025 post-elections. The US is such a big market in terms of population, capital. That's really important for a small asset class that is trying to grow and become the size of some other traditional asset classes. So I think overall it's positive for the sector. I think another big thing next year is markets in crypto assets within Europe going live on January 1st of 2025, where it will now be a regulated product. It will be something that you no longer have to deal with the patchwork framework of regulations in different member states. You can actually have cross-EU access, and I think that's important for adoption. So I think we are hitting a phase where the political climate and the general temperature has shifted positively for crypto. Regulation that takes multiple years to be discussed, implemented, and then go live is starting to come in, and all of this speaks to the maturation of the asset class.
I think that's a really important thing for you to say there. That it does feel, because I've been trying to sort of explain it over the last couple of months about what it feels like in the market from this roller coaster we've been on for a couple of years. But maturation is exactly what's happening right now, in my opinion. We're seeing something there which is no longer that sort of child's playground of people with fancy ideas, looking to get things moving as quickly as possible and throwing risk at everything. Now it feels like we're into the area there where it's got a lot of opportunity coming up that I think will come relatively quickly within it. And those people who've been playing the right game in the space, I think we'll start to see some really significant gains from it. And you can see the confidence, you can see the growth, you can see a lot of continued innovation in the space based off evidence as opposed to trial and error at the moment, which I think is quite an interesting way of looking at it, isn't it?
Yeah, I think you'll see some trends in the next year or two. I think you'll see more the crypto companies that have survived and scaled, more of them looking to IPO in general. Well,
there's a lot more money coming into it again at the moment as well, isn't there?
Yeah, and I think Coinbase was probably the biggest to date when they IPO'd in the US, and that was a real watershed moment for crypto because it was a company that had grown out of crypto that is 100% crypto focused, listing. That's given a lot of people, crypto ETFs, spot ETFs in the US don't happen without Coinbase going public because Coinbase are the custodian and the execution route for so many of those ETFs. And my gut tells me that wouldn't have happened if you didn't have a public company to do that through. So I think you see more of the bigger crypto companies add legitimacy to their business by going through that IPO process. I think you see some more mergers and acquisitions because I think that the financial services companies are going to have to partner or buy some of the crypto firms or the technology firms in order to have capabilities in this asset class. I think custody is an area where that's potentially going to happen, and also prime broking. One of the things about the crypto ecosystem at the moment is we don't have any traditional prime brokers that service the space. That's largely a regulatory and a risk appetite and somewhat reputational reason why they're not in the asset class.
It makes it a reputational opportunity at the same sort of time.
It does.
Doesn't it?
And it's also been an opportunity for newer fintech crypto firms to offer prime broking services to the market. But there is a clear need for credit and margin and leverage in the space, and that's being filled by predominantly fintechs. But at some point that's going to change, and then you'll see this M&A activity between like the existing prime brokers, and do they buy some of these, do the crypto PBs try and buy larger pre-Bs? I don't know. But you'll also see something happen with the custody landscape as well, because I think when the big traditional custodians like your Bank of New York Mellons and your State Streets really enter the asset class, you will, the long tail of native crypto custodians are going to have a decision to make about who their customer base is, and now that the bigger traditional custodians are in the market, and
how they compete, isn't it? That's the interesting side. I had a very interesting conversation a couple of days ago where to compete, it's about really marking your stall out as to what you can do, and there'll be native companies there that will do things that institutions simply can't do, and I think that's an important, or to certainly not do at the same sort of pace. And I think that's the knowing where your advantage is, as you guys have put all that thought and time into, I think becomes incredibly important in this sort of stage, doesn't it?
Yeah, and I think it becomes increasingly important as the asset class matures, because sophistication and specialization in different parts of the asset class. Look at this another way: when the asset class first starts, you can do one thing to many people very easily, and the asset class isn't specialized and it hasn't fragmented into different verticals as yet. I think now you have to be very selective about what it is that your business does, and what are you offering within the crypto asset class, as opposed to, and we see that with the unbundling of crypto firms, this concept of a one-stop shop that does custody, does exchange, does prime broking, issues digital assets. The more the asset class matures, the more there's conflicts of interest between those different things. Investors and your clients want to ensure they're separated, and in truth want each of those different things to be specialised and tailored around that.
And I think we've seen that, as you say, in other asset classes. There's a blueprint and a map to follow, isn't there, in terms of how and what it does, and this is obviously just...
Well, and regulation in place. Because things have gone wrong previously.
The beauty of regulation catching up into a space which never wanted it in the first place. Let's move on to something which I know you've also seen sort of evolve in your thinking as much as the marketplace is thinking, which is tokenisation. Tell me a little bit about your thoughts there.
I would say our thinking has changed on tokenisation from when we sat here a year ago. A year ago, I would have said to you that tokenisation was about moving the flow and the trading in traditional asset classes onto new blockchain-based systems with the rationale of shorter settlement times, more efficient markets, cheaper operation in general. Now our thinking, and I guess the thinking of the market as well, has evolved to a point where we think of tokenization as a different system with and crucially a different profile of client base. So a way to describe this would be the asset or the product that clients want to invest in can be accessed in different ways, and that exists in the financial markets currently already. So you can access a commodity instrument as an ETF, or you can access it as a future, or you can buy the underlying commodity. So there's already a variety of ways to access that product. We now think that you may want to access that commodity as a token. And the crucial point about this is every investor has their biases, every investor has their preferences around different systems. Sometimes that's down to the sophistication of the investor, sometimes it's down to the age, sometimes it's down to the geographical location of the investor, but they all have different preferences. So for argument's sake, someone that has a Web3 wallet and prefers to use that than a investment account, or prefers to use that instead of using ETFs as the way that they access the market, they may want to hold Bitcoin in their Web3 wallet. They might also want to be able to access a commodity fund as a token, and they're not going to want to, perhaps they don't want to have multiple routes of doing this. They just prefer to have their portfolio in one place, and they'd rather do it that way. So I think rather than thinking about converting and moving all of the plumbing and infrastructure that exists in financial markets and going to big asset managers and hedge funds and saying, you know what, you should stop trading bonds like that and you should trade bonds as a digital token because of these benefits. And they say, I will do that if 50% of the market moves with me, because I don't want to be the only one that does that. I think the industry...
strength in numbers game.
Well, and just critical mass as well. I think the industry now realizes that there are, let's say, crypto firms who day-to-day settle Bitcoin, Ether, and other crypto tokens. They manage their operations on blockchains. They hold treasuries on blockchains. They manage their collateral on a day-to-day basis on blockchains. With the interest rate environment that we've had, where interest rates have gone up, they're sitting there with dollars as a stable coin, not earning a yield. And now there's been a demand for, well, we'd like to earn some yield now because you can get 5% out there. So of course, it's no surprise that we've seen money market funds, yield-bearing money market funds, get issued onto Ether so that these types of clients can access that traditional product in a tokenized form. So that's what we've seen from a firm like BlackRock with their BIDL token, and something like Franklin Templeton with their Benji. They've all got great names.
They do well, don't they?
But those are examples of tokenization where a client base, you're actually going to get a product market fit, because crypto clients or crypto first clients want to hold these traditional instruments. And we've dealt with on our business crypto firms coming to us and saying, right, I'd like to hold treasuries now for that yield and to get an interest rate on it. And we say, all right, we'll connect you with our treasuries team. And then it's very much a computer says no moment, where it's like, well, the crypto firm doesn't have a settlement account at the traditional sort of custodian or clearing firm that you need to access US treasuries. So then it's like, well, you just can't buy them because you don't have this set up. And it's like, well, that's a big infrastructure lift for them to go and set up these treasuries accounts. But if you can give them a treasury as a token and they're like, oh, it's on Ether, it's an ERC20 token, oh yeah, we can handle that, we do that every day. So that's an example of where I'm seeing tokenization work.
It's again, it's an interesting evolution of how everything comes into play on that, and I love the fact that you're there to say, look, we've and I think this is absolutely necessary in this space. opinions change and minds change depending on what sort of evolves in the space, right? And it's not a dirty word, I think, in this thing to to pivot thought processes around what the market looks like.
Well, I think that's okay. I think that's and I think it's important. You don't want to be wedded to your initial assumptions.
Yeah.
Especially the more that the industry evolves, the more we know, the more we understand about how blockchains work and what crypto can do.
Exactly. Yeah.
Like, I think you're going to end up in trouble if you don't evolve your thinking in general.
Yeah.
So
keep evolving.
keep evolving.
Let's speaking of evolution, let's finish by talking about your evolution, not personally, but of the
business.
Of the business. So it sounds like there's some really interesting things that have been going. You've had this year of post-launch of seeing how things are going and evolving that sort of process, and perfecting and putting everything in place. What does the next 12 months look like for TP ICAP's digital assets?
Good question. So on our broking desk, voice brokers managing the derivatives, we're thinking about different ways of trading, different exchanges, so external third-party exchanges that we block trades onto, so where we actually send the trade for settlement. We currently use the Chicago Mercantile Exchange. We're looking at other exchanges, whether that be traditional or non-traditional exchanges. On our physical exchange for crypto, we're building out the market structure, so we're thinking about how do we evolve beyond one custodian, how do we look at the market structure for prime brokers and leverage and more capital efficient ways of trading in the market. We're looking at how we expand the universe of tokens that we offer, so beyond the Bitcoin and Ether. And there's a question there of, do you go deeper into crypto tokens or do you go into more tokenized assets?
Yeah.
And I think we ask ourselves the question, as a traditional financial services firm with liquidity in other asset classes, where's our competitive advantage, and which of those kind of routes from a list, adding different tokens to your venue, which route are we going to excel in, and we're going to be able to differentiate ourselves.
Yeah.
And I think that the more that we look at traditional assets like a commodity or a money market fund, or the more that this becomes something that's interesting to the wider area of the firm. And I think speaking to what we talked about, or referring to what we talked about a minute ago around our thinking changing on tokenization, to be honest, I'm not sure necessarily at this moment in time where this goes. Like, we've always thought it'll be a multi-asset class platform with a range of assets on there. How that fits in with clients that are currently trading traditional assets, like, is it just a different system with different clients on it, or do they bleed together in some way, and actually some of the traditional clients also want to trade on this new system? So we don't know at that stage, but what we want to do is build the exchange out so that it's operational, fit for purpose, multi-asset, and then I guess we'll litmus test where the industry is. And
that's the interesting part of it, isn't it? The ability to go into that and be thinking ahead into a space there which has no certainty to it, as we've seen in the last three, and I'm sure when we do Rocky 4 and come back and pick this up this time next year, there'll be more evolution in the space. But I think that maturation of which we spoke about, I think, is a really interesting concept to look at, and sort of almost like a thumb to put on the thumbnail to put onto this this sort of piece. It is evolving. It's got opportunities within it. You don't have to have something set to say this is the direction we're going in. I think as soon as you do that in this sort of space, it's where you die. But every time I speak to you on this subject, I sort of come away with thinking, God, man, there's so much opportunity, isn't there? There's so many interesting things that can happen. There's so much scale to do more things into it, and that's a great position for you guys to be in.
Well, it's exciting.
Yeah.
Always learning.
Always learning, always on the journey.
Yeah, I mean, we just have to hope that, you know, the underlying technology continues to evolve.
Yeah.
That means more developers building and expanding the blockchain services.
Yeah.
It means, as we talked about earlier, the blockchain teams and sales teams solving some problems in the real world. You know, one thing that, you know, we've kind of come to understand in the last few years is that, you know, much like within, let's say, TP ICAP's oil business, we know the price of oil, we know who's buying and selling, and we know how to coordinate that, but we're not a refinery, so we don't actually know how to, you know, distill the oil or change it into the products that actually the world actually ends up using, like petrol or something like that. In this asset class, it's kind of similar, right? We understand the price of Bitcoin and Ether, and we know who's buying and selling it, and we know how to coordinate that. But we're not technologists, and we don't necessarily, we're not the ones developing the underlying product, right? And, you know, much like with the oil analogy, that relies on, you know, people still driving cars, you know, trucks still shipping or sending products, sending supply chains everywhere, right? So those are the kind of existential questions about either the real world economy or the digital economy actually using these blockchain services, and then off the back of that, clients will have a need to transact in them, hold them, etc. So,
I see more and more development of it technically. I see more and more desire to adopt it physically, and within that, you know, there's smart people who are looking for the ways to make it, as you say, real world things, and that's, you know, in a similar way to what's happening in the AI hype at the moment, is when it gets to a stage there where you're looking at things that make it absolutely inevitable and absolutely clear cut in how this benefits and works for everyone. And I think we're so far ahead now in that journey as to where we're at. It points to a really sort of bright new future. So, look, I'm looking forward to number 4 already. It's been great having you back in here again today. And keep up the good work. Been good seeing you.
Great seeing you too.
And thank you all for watching. We will see you soon on the next episode of FinTech Focus TV.